Hi, my name is Rob, and thanks for checking this out. First, I'll explain the concept. The demo itself starts at 3 minutes. So, to start, shared services like marketing, IT, and data analytics complicate a business a lot more than you'd think. They usually start off clear and simple, but as an organization grows, new product teams emerge, and the needs of existing teams shift, things get complex. Here are some of the increasingly unknowable and costly questions related to optimizing shared services in a growing company. What is the in-house team good at, and do these capabilities match the org's current and future needs? Are they still the right team offering the right services? Are they as good as external agencies on price, quality, and timeliness? Is the staff actually busy with high-value work most of the time? How much should this capability cost the company? Does finance really know if a cost center's budget should be increased or decreased? Companies often pick safe but arbitrary budget increases like 6% year over year because no one can confidently assess the value they really provide. Or they cut budgets too dramatically when they need to reduce burn. Are shared service consumers appropriately accountable for the services they request? Meaning, are the product teams that use internal support incentivized to overconsume services because they're getting them below cost or because their allocation is a bit arbitrary, so they might as well get the most they can? Or perhaps they're incentivized to underconsume services because they're too hard to get or too expensive. Either way, it's bad for the organization. And last, how does a shared service team know which product team to prioritize? Is it up to them to decide which projects to focus their best resources on? Do they really know? Who gets to set timelines, and how do they know which level of support is appropriate? Quickly, organizations that wanted to save money and reduce complexity have done the exact opposite. They're wasting money, increasing bureaucracy, and handicapping their teams with lower quality support. Companies that use external agencies don't have these problems. If their needs change and their current vendor doesn't have the right skills, they just find a new vendor. What's the right amount to spend? Well, they can just look around for 30 minutes to get a feel for market rates. Are business units accountable for the value of what they're consuming? Well, they're paying for it directly and it's on their P&L, so yes, they are. How do agencies know which customers to prioritize? Well, their pricing and their profit motive make prioritization automatic. If they're bandwidth constrained, they'll prioritize the customers who need them the most, as demonstrated by their willingness to pay more. And then they'll scale up to meet demand so they're not going to have to leave money on the table again in the future. But this isn't ideal either. When you outsource, you sacrifice control and potential cost savings. Cone gets you the best of both worlds by allowing your internal services to operate as if they were agencies. Your business units can browse available services, work with shared service teams, and complete cross charges, and then can view their consolidated financial performance, which automatically includes those cross charges. For the shared service teams, this is great as they'll take on an entrepreneurial mindset, gain clear signals and incentives that help them to adapt to your company's shifting needs, and they'll be held accountable for and focused on adding tangible value for your product teams. Business units will find it easier to connect and work with shared service teams and will be more empowered and accountable to get the appropriate level of support, and executives and the finance team together will have a dramatically simpler time managing these shared services. It's much easier to identify bloat and measure value when a service operates like a real business. Product demo should make all this a lot simpler to understand, so let's get into it. Welcome to Acme, a hypothetical company that builds laptops, phones, smart home devices, and more. Currently, I'm logged in as the head of Iris, which builds a virtual reality gaming headset. As you'll see, Cone enables my team to operate like a startup within Acme. Okay, so let's say I need an animated explainer video that helps my new customers understand how to get started with our headset. To find that, I could click on Marketing and Creative here and see all the shared service teams internally that fall under this category, as well as any preferred external vendors that Acme wants to display shown at the bottom with red text. Or I could search for that capability itself. I'll filter by Marketing Creative and then by Animated Video. When I select a team, I land on their storefront. I can see their team links, bio, team members, including their roles and contact links, and their menu of services. They showed up in my search a second ago because they have at least one service categorized as animated video. Okay, so now I want to start work with them. I click on Intake and provide a high-level overview of what I'm looking for. In this case, I would describe what I want the video for, how I'd want it to feel, when I need it by, and where I'd be displaying it, and so on. Next, I'll select which services from their menu that I need. Even though it's probably obvious from their description, we could create email routing logic based on the boxes selected. I'll click Submit, and Happy Video will receive the request via email. If I were to have selected an external vendor, their page would look a little different. How this would work is customizable for each Cone customer, but in this demo environment, teams fill in a form explaining why they'd like to use an external vendor before redirecting them to fill out a purchase order through their traditional workflow, all of which would need to be approved by finance. You may already have a process for doing this, and we can simply preserve that process here. And this is the marketplace. It's an awesome feature on its own, but it's truly remarkable in combination with the others. So imagine now that some time has passed and the animation is complete. With Cone, Acme does something very interesting and totally brilliant. Happy Video will now charge Iris at actual market rates for that video. So why charge a market rate and not just charge at cost? First, there is the fact that tracking hours and receipts to calculate a specific project's cost is often harder than determining and charging a market price. But that's not the main reason. In general economics, the worth of what any business produces, their revenues, minus the cost they incur to produce it, their expenses, is their profit. In this way, profit is a pure objective measure of how much value has been generated by a company. Profit motivates businesses to create value for themselves and for their customers, and it simultaneously generates resources for reinvestment, allowing them to grow and create even more value in the future. The same feedback loops and incentives can apply to internal teams. When we allow shared services to earn a profit from other business units, a bunch of really good things happen. First, executives understand the degree to which various teams within their organization are contributing value to their bottom line. Before, it'd be very hard to say if that one product launch was successful due to an exceptional product team or because a marketing team is so phenomenal they could sell snow to Santa Claus. Second, shared service teams are now incentivized to maximize their direct value to the teams that they serve at the most efficient spend levels. Before, they'd be primarily incentivized to grow their teams and schmooze with executives. Third, both executives and shared service teams will have a sense for which capabilities their internal teams are competitive on and which ones fall short. Maybe a marketing team is fantastic at search engine marketing, but below average at social media advertising. Teams constantly requesting an external resource for certain types of projects will expose that, giving Acme a signal to invest in, pivot, or outsource a capability. Fourth, product teams now fully understand and are accountable for the true costs of what they're consuming. In most organizations, these teams are either getting fixed allocations that incentivize them to consume as much as possible, at-cost allocations, which are often opaque and more difficult to estimate than a market rate, and which don't make them accountable for opportunity costs, or no cross-charge at all, which creates the absolute worst incentives for all parties. And fifth, it sets up these internal services to serve external clients if desired. And this is great as it diversifies revenue streams for the company, and it pulls in more demand for that service, which can be used to scale and improve the quality of that team. Now, Amazon does this very well with their IT, logistics, and payments capabilities. AWS would have been an expensive IT cost center with 1% of its current functionality if it only served Amazon teams. Common reactions are that coming up with pricing sounds complicated and that charging between teams may hurt company culture, and both are very addressable. Setting price is often simple. Teams may estimate a markup on cost, or they can do a quick market survey of external agencies. Also, how each team charges is up to them and doesn't have to be complicated. Happy Video charges per minute of video, but other teams may charge a simple flat monthly fee for a couple of different service packages. Either way, we're happy to help you with this. And don't forget, this is a simulated free market. If a team doesn't break even in a given month, they don't have to go to court and file for Chapter 11. The team members still get their salary, and perhaps they just have to explain to an executive why they're behind on their targets. If teams have a dispute, they don't need to go to court. Firms can quickly settle these issues internally. This really takes a lot of pressure off of negotiations and collaboration. Now back to the demo. I could send a payment directly, but I want to show you how a team can request a payment and another can fulfill it. Here I'll switch to another window where I'm logged in as the head of Happy Video so we can charge Iris. Let's say it's a 2-minute video, meaning we charge $11,000 according to the rate posted on the menu. I click on Banking, Invoicing, find Iris VR, select the charge category, provide a little explanation, and an amount. I have an option to add a simple invoice here, but I'll skip it for now, and then request. Before I switch back again, note that because I'm currently logged in as a lead of a shared service, I have access to the My Storefront module where I can go to edit anything on my team page. Okay, so back to Iris VR. My banking notification badge just increased from 5 to 6 to reflect the new request. I'll click on banking and I can see requests here in my inbox. I should complete all of them, but for now, I'm just going to approve the Happy Video invoice. And there it is. My team's balance just updated here. You can see the transaction here. I could have also sent them a payment here had they not requested one. Happy Video will get an email letting them know I completed the transaction, and they'll see a cash inflow in their transaction history. Again, please remember that no actual money is changing hands. This is a database entry only that you can sync to your ERP or keep separated. There's no controls risk, and your admins can always edit or export these entries as needed. So this is the banking module. It enables a better version of cross-charging with superior incentives and feedback loops, and it makes life easier for the finance team. Again, a brilliant feature on its own, but truly remarkable in combination with the others. Last, we'll cover the reporting module, which shows a team their consolidated financial performance. Let's start on the internal-external view. What you're seeing here are all of my internal revenues and expenses. Since my team isn't a shared service, there's no internal revenue, but you can see all of my spending on teams like Happy Video here. If we switch to September, you can see the transactions we just completed here. Perhaps I also pay the internal data analytics, advertising, content, and customer support shared services. All of those transactions are automatically categorized and shown here in real time. Next to that, you can see all of my traditional external spend. This would be for things like flights, hotels, software subscriptions, and salaries. All things that are typically requested, ordered, paid for, and booked through finance. And that's still the case here. No need to change that. Finance books journal entries in their ERP, same as always, and then Kone syncs to your ERP by API or with a CSV template. Typically, this would be a one-way read-only relationship, so there's no risk of your ERP being altered. Kone is secure, but we can also just import your summary level data to provide even more comfort to you. All of that consolidates here in this column. I can view those consolidated totals by month here, and I can compare them to budgets here. Happy Video has the same type of reporting setup. For them, the transactions we just completed would show up in their September revenue total. This is a really big deal. The team leads and management having useful, simplified, and accessible financial performance data that fully accounts for the real contributions and costs, including opportunity costs that a team is responsible for, both inside and outside the organization. It's something nobody really does well, but is so important. This module gives team leads the information they need to manage their own business unit. It aligns incentives for everyone at all levels of the organization, and it gives management the information they need to reward performance and make strategic interventions. One more time, it's a brilliant feature on its own, but it's truly remarkable in combination with the others. So there you have it, and thank you for watching. Here we've seen how Kone can help a company and its business units be more effective and aligned. If you want to innovate as fast as agile startups, let your teams work like one. Don't let your next industry-defining innovation get stuck in the mud. Just imagine how attractive this type of environment is for entrepreneurial, innovative, and value-generating talent, and how unattractive it is to people who like to focus on office politics and empire building. Please remember that the features and design elements are highly customizable, and we're happy to work with you to make sure this is perfect for your company. Contact us on the website or reach out to contact@kone.network if you're interested in using the app or know someone who should.